Hello, everyone. I am Tatsuaki Kawai, President and CEO of Brass Corporation. Thank you very much for watching the Brass IR channel. First, I would like to explain the revision of our full-year earnings forecast. We have revised net sales and profit figures from the initial plan. The revised net sales are 14.433 billion yen. Operating profit is 580 million yen. Ordinary profit is 526 million yen. Net profit attributable to owners of the parent company is 315 million yen. The earnings per share attributable to owners of the parent company currently stands at 59.41 yen. Regarding net sales performance, we have downwardly revised the number of weddings from 3,450 to 3,310, as initial orders at our new Tokyo store were not as strong as we had initially anticipated. On the profit side, although short-term profits were squeezed due to sales falling short of the plan, increased personnel costs associated with strengthening the order-taking system, and aggressive investments in store facilities. On the other hand, orders received reached a record high, and since our business requires a certain period from order to completion, the current order situation will contribute to our performance in the next fiscal year and beyond. Next is the summary of financial results for this consolidated interim period. Net sales were 6.911 billion yen. Compared to the same period last year, this is 107%. Operating profit was 258 million yen. This is 74.5% compared to the same period last year. Net income attributable to owners of the parent company was 128 million yen. This is 54.7% compared to the same period last year. Regarding net sales, although the number of weddings was below plan, it increased year-on-year. An increase in the average unit price also contributed to higher revenue. Due to continued forward-looking investments, profits in each category have decreased. Next, I will explain the trends in our key indicators. The number of weddings was 1,593. This is 103.3% compared to the same period last year. The number of orders received was 1,972, which is 115.1% compared to the same period last year. The average unit price was 4,084,000 yen. This is 102.8% compared to the same period last year, and we have exceeded the previous year's performance in all categories. Next, here is some additional information on each item. Regarding the number of weddings performed, as I mentioned earlier, based on our current progress, we have revised our full-year forecast to 3,310 cases. The number of orders received surged to an unprecedented record high in the second quarter of this year, continuing the momentum seen in the first quarter. The order backlog, which will drive future weddings, is building up steadily. The average unit price also continues to perform well, contributing to increased sales. As for the consolidated balance sheet, it is as shown here. Regarding the cash flow situation, cash outflows from investing activities have increased due to capital investments in new store openings and existing stores. Regarding the year-end dividend for this period, we plan for it to be 8 yen, as originally scheduled. Now, let's move on to the Q&A session. I will now answer the questions received from our viewers. Here is the first question. You have revised your earnings forecast and are now planning for lower profits. Will this have any impact on your investment plans, such as new store openings or renovations of existing stores? No, there will be no changes to our new store openings, which are part of our growth strategy. We believe that investments in new store openings and existing stores are essential for generating future cash flow. To continue our growth, we will accelerate the opening of new stores. Moving on to our second question. The recent surge in crude oil prices will likely impact food costs. How do you plan to respond to these ongoing price increases? In response to rising costs, we will pass through price increases appropriately while striving to maintain profit margins by providing even greater satisfaction. Here is the third question. There was a downward revision to the full-year earnings forecast. Could you tell us about your future policy on shareholder returns? Yes, we take this revision very seriously. However, at this time, we are not considering any changes to our dividend forecast. We will continue to carefully balance the need for retained earnings for future growth with stable shareholder returns. That concludes the Q&A session. Thank you for watching our financial results video. We appreciate your continued support going forward. If you have any questions about this video or our financial results, please feel free to contact us here. Also, if you have any questions you'd like us to answer in a future video, please send them our way as well. We look forward to seeing you at the next financial results announcement.